Hey everybody, welcome back to Whiteboard Finance. We are in the everything bubble. Why are asset prices at all-time highs? And who is the biggest loser out of all of this? People holding cash, okay? Cash is trash, savers are losers. I've been telling you this on this channel for like 7 years now, but you won't listen, okay? Listen to me. Hello, time to wake up. So what is happening right now? So the S&P 500 is up 40% in just 6 months. Gold just hit $4,000 an ounce, and Bitcoin hit $126,000, giving it a $2.5 trillion market cap, its highest ever. Meanwhile, as you can see from this slide right here, the U.S. dollar is having its worst year since 1973. It's actually down 10.5% this year. So the question is, are markets really this strong, okay? Or is the dollar simply crashing? So let's break this down in this video. So let's take a look at some of these numbers right here. I like this website. This is companiesmarketcap.com. Not affiliated with them, but it gives you a nice snapshot of the biggest assets in the world and what their market cap currently is. So Bitcoin surged to $126,000. At the time of this recording, you can see it's at $122,800. We did have a small correction here. Gold hit 40 all-time highs in 2025. It's actually sitting at $4,007 an ounce. I told you 7 months ago when it was like $2,800 an ounce, it's going to go past $3,000. It's going to keep going because there's a lot of uncertainty mixed with a lot of M2 money supply, aka money printing, okay? Liquidity in the system, more currency units in the system. So this is 10 times Bitcoin's value, okay? And if you know me, if you've been watching this channel, I genuinely believe that Bitcoin will outperform gold. Maybe not in my lifetime, but we'll see. So I think we still have 10x to go. And yes, I know that puts it at $1.2 million of Bitcoin. I know it sounds crazy, but just trust me. So anyway, silver is up 60% year to date, as you can see right here. Okay, we're sitting at $48 an ounce for silver. These are traditionally safe haven assets, meaning they're supposed to rise when stocks fall. But here's the weird part. The S&P 500 is up almost 40% in 6 months, and the NASDAQ 100 has basically been up for 6 months straight. So take a look at this chart right here. You can see silver and gold just absolutely crushing. It's up 61%, and then gold's up 46%. And then the NASDAQ 100, this is the chart that I wanted to reference real quick. It's actually up 6 months in a row. The only other times it's done this have basically been in 1985, 2003-ish, 4-ish, 2010, and then 2016, 17-ish right here. You can actually pause the video and take a look. But you can see 1 year later, the average percentage is up 18.1%, and it's up 100% of the time, okay, after it's up 6 months in a row. So this is a very interesting slide. I would actually pause the video and study this slide. I'll try and zoom in just a little bit. I know the picture is kind of blurry, but I'm working with a small picture here. So just outside of the NASDAQ, we have the Magnificent Seven. So this is Apple, Microsoft, Google, Amazon, Meta, Tesla, NVIDIA. You know, they're investing over $100 billion per quarter into AI infrastructure. So stocks are booming, crypto's booming. And when I say crypto, I can't stand crypto. I'm Bitcoin only, okay? And commodities actually are booming. So this is not normal because they're all happening at the same time. So let's take a look at this correlation problem. So normally when the stock market goes up, safe havens like gold go down because investors take on more risk. But in 2024, the correlation between gold and the S&P 500 hit 0.91. You can see that right here. Obviously, 1-to-1 would be the same. So this means that they move together 91% of the time. That's unheard of. So what is happening here? So we're seeing a widespread rush into all assets because people know that this is a melting ice cube. This is all made up, you guys. It's supported by the military, your tax dollars, and I don't know, good faith, people actually paying taxes. So all these assets, stocks, metals, real estate, crypto, they're all moving up together, and that's your clue. It's not about growth. It's about the greenback, buddy, the dollar. Uncle Sam's IOU currency units. So if we take a look at the US dollar, it's on track for its worst year since 1973. So this is from the Financial Times. If you look at the percentage change in US dollar index for each year up until September 8th, starting in January, the red line is basically 2025. You can see 2013 was basically 0. 1991 was up 10%. Maybe that's the fall of like USSR. Who the hell knows? I don't know. But I'm not that old. I was born in 87, December of 87. I'm like a fine wine. Okay. I got the good hairline. Okay. Oh, dude. One of the comments in the last video, this guy's like, he cannot control both ends of the universe, meaning he was talking about the hairline, but he's starting to notice a little bit of gray, a little bit of salt and pepper. It's like a Just for Men commercial. I have this experience and the stamina. So anyway, my point is, I don't remember 91. But anyway, 2025, we're sitting here at basically 10.5%, as I mentioned in the earlier slides, okay? So basically, since 2000, the dollar has lost 40% of its purchasing power. And now with inflation rebounding and the labor market weakening, the Federal Reserve is cutting rates into inflation. So what do you think that's going to do to inflation? Duh, it's going to go up, okay? This, again, is not going to maintain your purchasing power, you guys, okay? I've been saying this forever. It's just now in vogue, okay? I've been saying this for literally 7-8 years. So CPI is still around 4%. Core PCE is nearly 3%. And the Fed, they're cutting anyway. They don't care. So anyway, that's something we haven't seen since the 1990s. So if you take a look at this chart right here, they're basically prioritizing growth and debt sustainability over price stability. So shout out to Charlie Bilello. This is his chart. The source is Y Charts. So red is actual CPI. You can see 4% annualized CPI since January of 2020. Remember, that's annualized, you guys. That's on top of the previous year. And then if you look at 11.6% above 2% inflation trend, the blue line is supposed to be 2% inflation trend since January of 2020, okay? Okay, so what does this all mean? We are ushering into the new era, but before we get into the new era, shout out to the sponsor of this video, JM Bullion. Time to can't even say it. Time to shill some gold, baby. Let's go. At the time of this recording, gold has outperformed the S&P 500 by over 30% year to date. I buy all of my gold bullion and precious metals from JM Bullion, and I've been doing so for 10 years. I allocate a certain percentage of my net worth to gold, and I think of it as an insurance policy on the rest of my portfolio. So during times of unprecedented money printing, gold is a smart choice to preserve your purchasing power. JM Bullion is one of the biggest precious metals dealers in the United States, with over $11 billion in precious metals sold and more than 6 million deliveries completed. They have over 400,000 customer reviews with an impressive average rating of 4.8 out of 5 stars. Join millions of satisfied customers who trust JM Bullion the same way I have for over 10 years now. Make sure to use my link in the description so they know I sent you, and happy stacking. So as mentioned, this is the new era. So what's really happening? So markets are pricing in a new era of monetary policy. So we're shifting away from the tighten into inflation playbook that we've always had to where we're basically rates are structurally lower, debt is structurally higher, and asset inflation is the new normal, okay? And at the same time, you have the AI revolution exploding. So take a look at this chart right here. So the biggest technological shift since the internet is happening, and companies are dumping hundreds of billions into chips, data centers, cloud infrastructure, and that's pulling massive liquidity into markets. It's also increasing your electricity bill. How am I going to power my sauna, my cold plunge, charge my Tesla, make my coffee with these electric rates? All joking aside, electricity is going up, you guys, based on where these data centers are being built. So investors are saying if the Fed is cutting while inflation stays high and AI is driving productivity, I want to own anything scarce or productive. So this includes, like I've been saying on my channel, stocks, Bitcoin, gold, real estate. These are real assets, okay? Some people in the comments are going to beg to differ, but whatever. All you need to look at is this chart, you guys. It's the wealth divide. So here's the darker side of all of this. The bottom 50% of Americans now hold just 2.5% of the total U.S. wealth. Meanwhile, asset owners, these are the top 10%, they're capturing all the upside, okay? So as the everything rally accelerates, the wealth divide is only going to widen, okay? This leads to some French Revolution, off with their head type stuff. But who knows? Americans are, let's be honest, bread and circus. Oh, my team's playing on Sunday, and just shoving their food into their mouths all Sunday long into their comatose state. What's going on in geopolitics? I don't know, but the Browns are playing this Sunday. So this is why I always say, be an owner, not a loner, okay? Cash is losing value, assets are holding it. So if we look at this is pretty interesting. Since the launch of ChatGPT in November of 2022, job openings have plummeted, but stocks have soared. So what is this? Is this a generational macroeconomic shift unfolding in real time? AI is changing productivity. The Fed is losing control of long-term yields, and asset markets are decoupling from fundamentals, okay? So this is what happens in late-stage empire and capitalism. Actually, sorry, Freudian slip. This is what happens when monetary policy meets exponential technology. So what does all this mean? Okay, markets aren't that strong. I think the dollar is getting a little bit weaker. What do I mean by weak? I mean that, think about it. If you look at countries like, let's say, like Lebanon, Turkey, anywhere where there's a little bit of turmoil, they spend their local weak currency first, and they try and keep the dollars in their back pocket, okay? Because this is typically, I mean, it is the, world's reserve currency. It's why I invest mostly in VTI. I'm just being a little bit hyperbolic in videos like this. It's again, Marko, shut up and show me your portfolio. Most of my equity net worth is in VTI, right? But then I also have opposite sides of the spectrum, things like, Bitcoin, gold, collectibles, things that I'm not going to name right now. But there is a high correlation between all these assets right now, because I think people understand that, hey, inflation is higher than what I'm getting in my high yield savings account. I need to go risk on, and I need to start buying some stuff. Otherwise, my PP, my purchasing power, is going to get absolutely decimated, okay? So if you understand this game and you're positioned properly, because you watch my channel, you signed up for Whiteboard Finance University, we've been talking about this for 2 years in my private community, those who own assets are going to own the future, okay? That's why people that live paycheck to paycheck can never get out of generational poverty, okay? Because even if they know what to do, they don't have the money to do it. They don't have the money to invest. That's why you need to own assets. People who own assets, the money printing will just inflate it. Nominally, we are all getting rich. Oh, I'm a millionaire now. Great. What is $1 million? Nothing. I always say that a Honda Accord, literally 25 years from now, 30 years from now, is going to cost $80,000. And people think I'm joking. I'm not joking, okay? I've been studying this stuff since I was 18 years old, almost 20 years now, okay, you guys? Honda Accord is going to cost 80 grand. Is your purchasing power being preserved by the stuff you're investing in? Very simple equation to figure out. If you got value from this video, of course you did. It's the best finance channel on YouTube. Of course you got value from this video. That's why you keep watching me. That's why I have 1 million subscribers, okay? I have a great channel. I am awesome. My wife says I am God's gift to earth. My mother loves me. I'm just kidding. I'm just talking smack. Seriously, guys, I do a lot of research before I make these videos. I don't try and just regurgitate a bunch of CNBC headlines. I've been saying this forever. This is a melting ice cube, okay? This is just prop money from Amazon, but it's a melting ice cube. You need to be invested in things that go up with the money printer, okay? You got to understand the game. Yes, it's made up. Yes, it's rigged. Yes, it's a big casino. Yes, it's decoupled from fundamentals. Yes, my finance degree is worthless, right? But you need to own assets, because that's where the casino is and that's where the money is. Think about it this way. How many people, think about Deborah in accounting. Deborah doesn't know anything about finance, okay? Doesn't know about investing, doesn't know anything. What does she do when she gets her paycheck? Her 401k goes into the S&P 500. Large cap stocks, that's what Dave Ramsey, people just do it. They're just conditioned to put money into the market. They don't even know why they're doing it. They know that's what they're supposed to do. I have a job because I need health insurance and I get a 401k from it, okay? That's how people think. What do I invest in? I don't know. S&P 500? Great. Let's do it. Let's blindly put money into this market. But what happens when the productivity isn't there? Is AI going to boost it, or is it going to destroy it? I think AI is going to take 5 jobs for every job it creates. So that's a whole different story. All right, guys, I'm rambling. You guys are the best. As always, have a prosperous day. Peace.